Hi there, welcome to Kneppy Invest. Only two more standalone June Quarter Appendix 4Cs to go, including this one, and the final one will be on Buddy Technologies. About 6 or 7 group videos to do, and hopefully I'll be able to complete those videos by the time the first September Quarter Appendix 4Cs drop, which should be in about 2 weeks' time. In this video, I'll be looking at a company called Mosaic Brands. This is a company I held in the past. About a year ago, I held this company for a little bit of time because this was a company that I thought had the potential to rebound quite well. Unfortunately, when I did have a look at their accounts, there was a significant red flag in their accounts, which I will talk about in this video, and I decided to sell, and the share price has taken a dive since then, and there has been concerns in the market that this company might have some problems staying in business. And we'll also discuss about that during this video. So let's get into it and let's look at some facts in regards to Mosaic Brands. Mosaic Brands is all about retail, particularly women's apparel and accessories. They have quite a few stores: Miller's, Rockman's, Noni B. In fact, they were actually called Noni B up until a few years ago. Katie's, Autograph, W Lane, Crossroads, Beamy, and Rivers. To be honest with you, I have never gone into any of these stores apart from Rivers. That is both men's and women's clothing. All the rest, I do believe, are women's. So I have no reason to go into any of those stores. Mosaic Brands was founded in 1977 and listed on the ASX on the 11th of May 2000. So it's been on our exchange for 21 years. The CEO/Managing Director is Scott Evans. He has a 3.5% stake in this company, so a little bit of skin in the game. And the largest shareholder is Alcyon Group with a 35.9% stake. So it's a fairly large stake for one significant shareholder to have. The market cap of Mosaic Brands at 54 cents is 52 million, and that will seem fairly low when you look at the revenue this company does have on a year-to-year basis and the potential of cash flows as well. And the ticker code is MOZ. Although this video was supposed to be in regards to Mosaic Brands June Quarter Appendix 4C, they have released their financial year numbers, so I'll talk about that in this slide. And this company does produce a lot of revenue, 708 million, because they have quite a few stores, even though the number of stores is decreasing. Probably the only issue is most of their brands, like Miller's, Rockman's, Noni B, Katie's, Autograph, probably aren't the sort of brands that are growing quite quickly. Now, if you talk about something like Premier Investments, who have Smiggle, Peter Alexander, those are sort of brands that are growing very quickly. So not a lot of growth when it comes to the brands in the Mosaic Brands group. And even though they have $708 million of revenue, net profit after tax is only $2.8 million. Now, I rather look at operating cash flow, but when you look at a retail group like Mosaic Brands, there was an accounting change a few years ago where leases to get taken out of the operating cash flow and be put into another line. And in my opinion, the best way to judge operating cash flow of a retailer like Mosaic Brands is to look at the operating cash flow they do provide and then minus the lease liabilities from it to get a bigger picture of how the business is progressing. And when you do that, you get operating cash flow of about $27 million. They actually have net cash, so net debt is minus 27.6 million, which means they have net cash. So it doesn't look like debt is an issue at this point in time. And when you minus the net cash from the market cap, you've got an enterprise value of $25 million, which means the enterprise value to operating cash flow is less than 1, which is screaming this is a really cheap company. But there are issues. And I think that, I saw in the accounts, when you look at the half-yearly and the yearly accounts, and I think the market had the same issues that I had as well. My concerns with Mosaic Brands is in regard to their current ratio. Current ratio is simply the current assets minus the current liabilities. And typically you want that to be greater than 1, because if you have current liabilities greater or significantly greater than current assets, there is some short-term issues about whether you can repay some of those liabilities in that short term, that current term. And for Mosaic Brands, we have a current ratio because they have current total current assets of 179 million and total current liabilities of 335 million, which means their current ratio is 0.5. And this was an issue last year in the 2020 accounts as well. And that's one of the reasons I decided to send out, because I just didn't understand why they had a current ratio of around 0.5. I did a fair bit of research on this topic about current ratio, and I did find companies that have fairly quick turnover of their stock can have a current ratio that is less than 1. It's not out of the ordinary. And I did have a look at, I think it was Myers. They had a current ratio fairly low. They have a high turnover. I had a look at Woolworths, so some supermarkets have a current ratio less than 1 as well. But my concern with Mosaic Brands, a current ratio of 0.5 seemed to be really low. And although there could be issues, particularly if we go back into lockdowns. And that's exactly what has happened. Sydney and Melbourne have gone back into lockdowns, and it seems like Mosaic Brands was seeing some issues in their business. And because of those issues, we were seeing the share price go down a fair bit. In fact, you could say it fell off a cliff because the market was becoming concerned simply because they were wondering whether Mosaic Brands could pay their current liabilities because their current assets were a problem. And they're concerned about whether this company can generate enough cash in their business to cover the current liabilities, whether they can continue that high turnover they were experiencing in the past. This current ratio issue with Mosaic Brands has been a short-term issue. So this is looking at the last 7.5 years for this company, the current ratio. So looking at total current assets, which is in the green, and total current liabilities. And if you go back to 2019 and previous to that, this wasn't an issue, but it became an issue towards the end of 2019. So the last 3.5 years, we've seen total current liabilities increase, but total current assets actually decrease. So that current ratio keeps getting lower and lower. Right now, it's at 0.5. And that does cause some issues, which Mosaic Brands, I think, found out in the past few months. We were seeing the share price drop and drop for Mosaic Brands. The market was concerned about the future viability of this company. And then on the 6th of September, Mosaic Brands announced a capital raising. So this was a fairly big capital raising. And the main reason they decided to do this capital raising was quoted in, I think, the presentation. It said, given the prolonged lockdown and subsequent impact on cash flow. So this was all about cash flow. So their turnover was lower, so they weren't producing the cash to pay their current liabilities. So they needed some extra cash to do that. And this is the whole reason they did this capital raising, because if they didn't raise some money, the going concerns of this company were or had to be questioned. Now let's look at the Appendix 4Cs for the March and June quarters we have just experienced this year. Now, this company's receipts is quite seasonal. And so the March quarter typically tends to be one of the worst quarters. And you definitely saw that in this quarter. Receipts of customers, 158 million. And they were operational cash flow negative by $45 million. That meant the cash on hand actually decreased from 119 million to 48.6 million. They also had $51.5 million of debt. So they're actually debt positive right here by about $3 million. But they did expect things to turn around in the June quarter. So the March quarter tends to be one of the worst quarters, and the June quarter business does return. So let's see how business went in the June quarter for Mosaic Brands. And definitely, business did improve. Receipts of customers increased to 228 million, and they were actually operational cash flow positive by $53 million for the June quarter. Things were looking up, and actually grew the cash on hand from 48.6 million to 57.8 million, even though they repaid $20 million of debt, and they decreased that debt to 31.5 million, which means they had net cash by the end of the quarter. So even though they have net cash, no debt, it was actually the cash flow issues they've experienced because of the lockdowns in Sydney and Melbourne as the whole reason why they had to do a capital raising, because there were concerns about those current liabilities. Onto the charts for Mosaic Brands, and the first one here is the weekly chart going back to 2015, and we did see a period of time here between 2015 and towards the end of 2018 when the share price of Mosaic Brands actually increased by 8-fold. went from 50 cents to almost a high of $4. So great times for shareholders during that period. Now, somewhere in there, there was a major acquisition that Noni B did, which was Mosaic Brands, before they made this acquisition. There was another company called Specialty Brands, if I remember correctly. Specialty Brands had City Chic and all these other companies like Miller's, Rockman's, and they decided to sell off all those other brands and keep City Chic, and they became City Chic, and City Chic has performed quite well. And Mosaic Brands, for a period of time after they made this acquisition, share price kept on rising, so the market was quite enthusiastic that this company was going to perform quite well. But then things turned around towards the end of 2018 when the share price got to almost $4, and we have seen the share price under strain ever since then. In fact, the share price fell from $4 all the way down to 25 cents during the peak of the COVID-19 financial panic. We have seen a little bit of recovery since then. Share price has gotten above $1 a couple of times for a brief period of time. But the share price is still in a long-term downtrend. The share price is still going down when you do look at this long-term chart. The share price has struggled to get above all three moving averages, and the shorter-term moving averages, the 20-week and 10-week moving averages, have remained below the 50-week moving average. So when you look at the 50-week moving average, it keeps going down, and that is a definition of a company share price in a long-term downtrend. And right now the share price is around 50 cents, so nearly at a long-term low if you discount the COVID-19 financial panic. So this company is under a little bit of stress. But sometimes the best time to buy into a company is when it has been under a little bit of stress, but it has taken some steps to relieve that stress. And that's what Mosaic Brands have done with this capital raising. Briefly look at the daily chart here, which does go back just before the COVID-19 financial panic lows, when the share price of this company fell to 25 cents. No real discernible uptrends here. We have seen brief periods of time from October last year to around February when the share price looked like it was starting to climb up. That's the time I actually did take a position, but when I did read their accounts, I decided to sell out because of that red flag in regards to their current assets and current liabilities. When they did release their half-year results in February, the share price did fall, and the share price went from an uptrend to a new downtrend, and the share price has been falling ever since that half-year report in February of last year. When Mosaic Brands did announce this capital raising, the share price actually did rise for a couple of days. In fact, the share price rose from about 40 cents all the way up to 60 cents. So that's a nice 40 to 50% rise on the back of this capital raising, because again, the market's concerns had been alleviated, but the share price has pulled back from that time. So in my opinion, do keep an eye on Mosaic Brands, because sometimes the best time to buy a company when the company has been under stress, and those stresses have been relieved by some of the action the company's done. This can be the best time to buy into a company. That is all I have for this financial year 21 and Appendix 4C June Quarter Results video for Mosaic Brands. If you have any questions about this company or any other company on the ASX, I'd love to hear your thoughts, your opinions, and anything you else have to say. So if you completely disagree with me, if you think Mosaic Brands is the greatest company in the world, I'd love to hear your reasons why. The last thing I should mention is I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.